have plenty to talk about. I think we could probably do a whole day session on all of these topics, but I think to start with, I think there's a sense of cybercrime, AML, and national security kind of swirling around, and we thought we wanted to break this apart a little bit, and in particular start with this question of cybercrime, and it's important in the crypto ecosystem. And so maybe we want to start with our discussion kind of just setting a little bit of like, why is cybercrime an important piece of the puzzle for crypto, and what does it mean from a compliance and a proactive stance perspective? So I don't know who wants to kick off with that.
Yeah.
Sarah, you want to take that?
Sure. So why is it an important piece? I mean, ideally it wouldn't be part of crypto, right? But I think one of the things when I first got into this industry that someone said that I thought was, very apt is that criminals are often kind of first adopters of new technology. And so, there's obviously there's a criminal component to what's happening on crypto. I think cybercrime is obviously not new. Crypto is, arguably not that new anymore, and even cybercrime in crypto is not that new, right? Like at Chainalysis, we really actually got our start with Mt. Gox, right, which is 11 years ago at this point. And so it's something that's been around for a while. I think what's maybe different or new in this moment is the fact that as more and more values being, moved on chain, right? The stakes are a lot higher when it comes to cybercrime, and cyber criminals are more sophisticated, right? Because they tend to be sort of on the edge of technology when it comes to these things. And so I think it's, more than anything, it's that the stakes are higher, and as kind of more and more of the financial system is on chain, one of the things that's sort of unique about cybercrime in that sense is that there's direct access to the assets, right? When there's an incident on chain. So historically, cybercrime has been a lot about like data theft and things like that. When you apply it to crypto, there can be very quick and very large access to assets, right? And so that's why I think cybercrime becomes, tackling cybercrime and having a proactive stance on it becomes even more important as we kind of move forward.
Yeah, and it's interesting. I mean, we think about cybercrime, especially as you talked about with kind of the traditional threat or scam actors. We think about that as an OFAC or a BSA issue in the US. I thought it was really interesting. Elsa, do you want to talk a moment about in the EU and the DORA and how it applies to VASPs?
Yeah, so let me take a step back. My name is Elsa Madrolle. I'm general manager for VerifyVASP, which is a regulatory technology company specialized in travel rule. So travel rule, for those of you who may not know, is an AML CFT requirement announced by the Financial Action Task Force that trickles down to VASPs, to virtual asset service providers, who have to start to exchange PII during certain elements of PII when they're transacting with another VASP. So it effectively de-anonymizes certain VASP-to-VASP transactions. It's particularly relevant in the explosion of scams that we've seen of late, which tend to originate not in sanctioned countries. And so once you implement the travel rule, you are able to start to identify who is behind certain transactions, and it really, really disrupts the scams. In answer to your question, sorry, I just wanted to set the stage.
No, please.
We have in the EU the DORA regulation, the Digital Operational Resilience Act, right. Apologies. Digital Operational Resilience Act, which is a unified framework really for assessing ICT risk. It's for financial services firms, so it's not just for crypto firms. It's across the board. There's really no comparable in the world. In the US, you have a number of pieces of legislation across different states and different sectors that seek to achieve the same thing. But it forces obliged entities to do a certain amount of due diligence on their ICT service providers. It divides them into three, so non-critical, critical to operations, and then what they call critical ICT service providers, which is the second level of critical, kind of code red critical. And we're talking about, you know, the AWSs of the world, where if they went down, the entire kind of system goes down. So that went into force in January in the EU. There are equivalent, you know, frameworks that are kind of patchwork across the globe, but it really is just one of a kind.
Yeah, it's interesting. I mean, you think about the legislation that was talked about this morning and some of the things that are moving through the Congress here, and a lot of applicability to centralized entities. But Hedi, does that principle of same risk, same rule apply to DeFi, or is DeFi something different that we need to think about when we're thinking about these questions of, particularly about, first we'll talk about AML, but about cybersecurity as well?
Right, thank you. I have to say I'm one of those advocates that is not the same risk, same rule. It's actually, I think, the type of regulation or risk mitigating measures should be very much fitted for the function of an entity itself. DeFi is an elephant in the room. So I've been in TradFi working with HSBC, BNP Paribas, long time back ago in the fintech with Revoluts of the world, and then with centralized crypto exchanges. And then I thought, yes, 1inch is one of the biggest DEX aggregators in the market, and that's the elephant of the room, and I want to experience it. That's how I joined, actually. I love the challenge. And now that I'm in a real DeFi scene, absolutely the outdated regulation won't be a fit. We have a difficult time every time at a table with regulators, policy leaders, just explaining the concept of self-custody, the concept that everything is operating on a smart contract, is the execution on smart contracts. So we do need, obviously, sort of recommendations. Of course, the risk is never zero, and also DeFi and the protocols are exposed and vulnerable. And that's also, I think, the link back, the bridge to your cybercrime point. When we have a conversation with policy leaders and they ask me what keeps you awake in the night, honestly, it's the hacks and exploits. I've been awake during the Bybit hack. I've been awake during every single incident exploits, and we call it the 0 days. It's just the time is of an essence. And that's why I think the risk in DeFi or for protocols in this space, it's not about money laundering, sanction evasion, the trad-based, traditional type of risk we talk. It is about the cybercrime and these type of incidents. It is on top of our mind.
Do you think that decentralized platforms are hampered in their ability to react effectively to cybercrime because of their decentralization?
That's a very good question. I think I have to say one beauty of it is that when you are talking about a real peer-to-peer, you're able 24/7 live spot exactly the flow of the fund. That is a beauty. I've been working on different investigation cases with Interpol, Europol, and authorities. There is a difference when you're dealing with a case with centralized exchanges. It hits the centralized exchange, and that's it. You do need their collaboration to solve the case, yeah? But with the protocols and in the DeFi, it's pure peer-to-peer, and that's what we mean really by a peer-to-peer, and I think that absolutely helps when we are dealing with solving investigation cases and the crime, yeah.
Yeah, and I think to that point, you brought up the Bybit hack, right, which was kind of a big hack that was in the news this year and was sort of like at a scale, right, that feels like a worrying trend. But to Hedi's point, we acquired a company called Hexagate that does on-chain monitoring and security for smart contracts. And I think the gap isn't necessarily in the ability to kind of monitor these things, but it's just sort of getting protocols to realize, what's available and what's out there. Because when you look at most of the hacks, one thing that's really interesting is that most projects that have been hacked had been audited at some point, right? And so auditing is important, but that's sort of a point in time assessment, right? And it doesn't really capture the dynamic nature and how quickly things are moving. And the other thing that's interesting is that most of the responses, don't happen within the first hour, and that's like the really critical period of time. And so if we can kind of move the industry more to real-time monitoring and alerting, and you can actually sort of build things into the smart contract, right, to take certain actions when there's certain patterns of behavior happening, that can all be built in, right? So I think it's more just about adoption and awareness necessarily.
Yeah.
If I may respond to that, just as a context, in addition of my Harvard affiliation, I was the head of the Israeli FIU, and I was also the head of the RTMG working group at the FATF, and I also one of the people that actually drafted the travel rule, so one person at least here to blame. And from my experience
a travel rule fan in the audience, it's amazing.
Or to blame, but that was a fascinating process to actually think on how and what type of regulation framework to put on digital assets. It was a very long process, but this is perhaps for another panel. I do want, as a person that actually investigated as head of FIU, the FIU which was granted with the highest effectiveness score by the FATF, should I say, I investigated many cybercrime cases as well as money laundering. And I think that what's interesting here is that we see cases in which the cybercrime attack and the money laundering are sometimes merged together. And while in the cybercrime domain, we try to prevent things from happening, while in money laundering, and especially in crypto, we're looking more passively, we as a community, and we're trying just to investigate that. And most of the tools are forensic investigations rather than proactive preventions. And I advocate very strongly to change the concept, and I think that the industry is mature enough to move from this reactive approach of forensics to a preventive approach, which is what we're using for cybercrime to prevent that. And I think that there is a second generation of technology, of blockchain analytics companies that already exist out there, and I'm working with some of those companies that are aggressively and proactively going to look at the entire ecosystem, not only decentralized digital assets, but also the decentralized, and to try and do the analysis in real time. Now, why the real-time analysis matters so much? Because in the fintech industry, where we see now a merger between traditional financing and digital asset, especially with stable coins and other means, the industry, the private sector really wants to make sure that you are able to do this investigation and get the clearance prior to the transaction, especially when traditional financial institutions are involved, not only VASP. And for them, it's really important to have this assurance, and it is possible to get there. And I think that as a community, this is where we should go.
So what do you say? Oh, go ahead, Elsa.
Yeah, no, I would just add to that. So when you said clearance pre-transaction, I think my travel rule peer will agree. It's a best practice that's emerging is this concept of pre-transaction verification to give banks and VASPs a breathing space to be able to identify something before it happens. And so the FATF has actually issued two recommendations, one last year, two revisions of recommendation 16, one last year, one this year. It's being talked about. It's probably going to be a best practice, but it will be transformative.
Yeah, and also
Hedi,
to apply to fintech as well, which now it doesn't apply so well.
Hedi, can that apply in the decentralized context as well?
With all due respect, sorry, I'm not in favor of travel rule. In terms of what I feel, and not that I'm not in favor of travel rule, just to be clear, I think this travel rule has been something, of course, from long time ago we had Citibank, and that's how basically it started in the TradFi, and absolutely it works very well for fintech. and for TradFi. It works very well. But when we are talking about crypto in terms of applicability, and at the moment we have still the challenges of implementing travel rule, and we don't have a universal solution. We have, of course, technologies as Elsa and others are working on it, but we have difficulty from the business side to implement travel rule, which is a requirement very well fitted for TradFi. And what happened, I think, with FATF, when they introduced a recommendation, they just copy-paste the same as existed for TradFi for something that is operating on a different technology, which we are talking about, blockchain. We have the transparency out there, and I think travel rule works, of course, in a SWIFT, those in, I think, financial services are very familiar with how SWIFT is working. That's basically the travel rule. And we have intermediary bank, we have beneficiary bank. No one else, neither of us, not the government, not the authorities, know what's going on in a transaction. Only the banks know. We had many misconducts by financial services. We needed these rules, these requirements. But with blockchain, again, I think I advocate that. We are today in a moment that we can see everything on chain. We can see the pattern of malicious activities on chain. And if we see something is wrong, of course, we have to, I think authorities would reach out to the centralized exchanges and they have to collaborate with the authorities. DeFi, I wouldn't say travel rule would not, even for DeFi, that is something I think technically speaking, not possible. But we do have wallet screening, for example.
And I think if you pull back for a moment, I mean, it's this concept of know your transaction, right? Or would you not? Would you agree with that, Sarah? I mean, do you think that a holistic concept of knowing your transaction is kind of the direction we're trying to land at, or is it something different?
Well, I think, as Shlomit was saying, I think it's moving from that like point in time approach, right, which was just transaction screening kind of, and that's where, you're talking about the second generation of blockchain analytics companies. So like as a blockchain analytics provider, that's absolutely where we're going, because we 100% agree. Like we need to move to a preventative mindset, and that will help address some of these questions, right, about the applicability of existing regulatory frameworks. But so it's moving from that, like, okay, I'm going to screen a transaction that, is within my network. If I'm a central exchange, it's one of my customers, to being able to actually look at the whole ecosystem and look at be able to kind of use the intelligence that we have and the fact that all these transactions are happening on chain to do more, right? So it's not just that point in time screening, it's actually looking at the ecosystem, looking for patterns. There's certain information, so like in a service like ours, the core data is deterministic, right? Because for use cases like a forensic investigation, you need to know, right? It needs to be certain information. But on top of that, we've built a lot of what we call signals, but it's that probabilistic information. What are the patterns? What could you deduce from this, right? So that you can do more assessment than just sort of that like point in time screening of a transaction.
If I may add, I think from my experience at the head of FIU and the data-driven approach, what's most important is to have clusters approach, patterns, anomalies detection and clusters. This is the only way to actually fight cybercrime and money laundering, because if you go following per transaction, you'll never be able to see the cluster and the phenomena. And for example, we see networks of North Koreans, of Iranian money launderers and terrorist financier who are adopting a certain pattern, and you could do transaction by transaction and you will never be able to find out, even if you go 10 hoops back. Only while looking at the clusters, you could see this entire overview and then to take real actions. And this is the approach that should be taken, not linear investigations.
So you were knitting this broader, more holistic information picture. Just to pick up on one of the earlier panels, what's the implication of AI and the potential for deep fakes of identity information and other types of identifying information on that type of an approach?
The first thing that I would comment on is on the know your transaction. AI can go much, much further than 3 to 6 hops. In fact, you could potentially have the whole life cycle of the transaction. Politely disagree. If you have travel rule, then you potentially have an identity at some point that you can kind of fall back on. So I do think the travel rule does work. There's nothing wrong with the policy. It is being implemented in a very haphazard way, and it's a patchwork. There's a problem at the FATF level, there's a problem at the regulatory level, and there's a problem at the industry level. So we're definitely growing pains, but I would point to jurisdictions where the travel rule has been enforced, is being enforced quite rigorously, and it does work. It does work with kind of the overlay of AI as well.
Elsa, what's the key thing that you think, what would advance this in the next step? If you could pick one thing to advance.
Well, since we're in the U.S., it would really help if the U.S. aligned with FATF.
What's your next highest priority? Other thoughts on the AI question?
AI has two main aspects for the discussion. First, it's much easier to do the onboarding of clients because, well, on one hand, the bad actors are using that, as we just heard, about deepfake and to manipulate the system, and also to conduct cybercrime and fraud and everything that was discussed. And I think that it is going to be impossible to deal with that in any other technology other than AI. You have to fight fire with fire. You cannot do it without AI, and therefore the entire onboarding process has to implement into it some AI. It also makes it much more efficient. I recently completed a process with a fintech company in which we transfer the entire onboarding process to AI and machines. By the way, in such a highly regulated industry, machines are implementing the policy much better than low skills employees that are doing this routine work. It is, you know, it's a race arm. It's not going to end anytime soon, but at least we're all improving in those aspects until technology will find the solutions to fight deepfake, as we found for spam, for Napsters, for IP. It will come at some point.
Hedi, is AI a possible way forward in the DeFi world for using technology to help control access to platforms, or is it yet another challenge for programmers and for entities that are launching DeFi protocols?
No, 100%. I would say even at 1 inch where we are, which is the scene for DeFi at the moment is unregulated, and again, it's an elephant in the room. We took a self-regulatory approach. So for us, security doesn't matter about regulation. Security and safety of the platform is utmost priority. Users should be safe, but also platforms should not be misused by bad actors, and that has nothing to do with regulation. It's about the safety of the platform. And we are embedding actually various technology providers that again, it's live detection of malicious tokens to the user, just giving a warning before, again, we don't have a custody, but just giving a warning 24/7 to the user when they want to do a swap. Hey, it might be a hacker sitting behind a token. Hey, it might be a malicious token. This is only possible with technology. Yeah? And the same, we are using, actually we collaborate with law enforcement agencies on various, again, cybercrime, complicated investigation matters, and we are using a very comprehensive, complex IP analytics. Yeah? It's the behavior of the user, what's happening on-chain, and with the entire IP and fingerprints of the user we are collecting, we are able actually to assist law enforcement agencies without having a KYC in place. We are not yet regulated, but we can help within the investigation cases to get a resolution. And this is absolutely only possible with embedding right technology. And I think when it's about DeFi, look, DeFi and the space, it's all about also the privacy, yeah, the privacy. And I think in the previous panel or before, it was discussed that we have an identity, and crypto-savvy, crypto-native users care about the privacy. That was the entire idea behind also blockchain as well. And what we are thinking, technologies like ZKP, zero knowledge proofs, I mean, they exist and we can leverage from them, building a safer ecosystem for everyone, but also preserving the identity and privacy of the users. And that exists, but we have to be able to use it. And I think challenge is, I've been talking to different regulators. They don't know what is ZKPs. I mean, I'm very open about it. And they are not comfortable implementing something that they don't know about it.
And I think that there's a certain level of sophistication that comes with scams, that comes with money laundering. Talk about how the intensity increases when you get to national security concerns. I don't know if, I know Shlomit, this is something you've looked a lot at, so.
Yeah, so I was looking a lot on national security matters. We see how terror organization, how certain countries, for example, Iran and others in North Korea are using that very actively. And this is not just, a theoretical thing, it's actually happening. I personally seized funds of terrorist organization many times in millions and millions of dollars until they instructed their supporters to stop donating them through this channel because we were able to find those funds. However, a couple of observations. One, certain jurisdictions are openly allowing those illicit actors, those bad actors, to work on those domains. There are certain jurisdictions, we all know who they are, that allow to VASP to work without properly KYC the actors, and I think that FATF should take stronger actions against those jurisdictions. Second, I think that the regulator and supervisors should use better tools, as was mentioned here. They need to look at the ecosystem and be able to go and do the supervision very accurately and correctly on the VASP or other actors that are providing the services, and be able to notify them that they are providing services to those actors. Not always they don't always know how to do it. And third, collaboration with private sector is needed between government and private sector to make sure that they are going after them. Otherwise, it is impossible to fight it.
Yeah. Hedi, or Elsa, the complications that you see from national security threat, from nation state kind of threats or terrorist organizations.
I mean, I can pick it up. I think fighting financial crime is a collaborative act, yeah? I think one of the challenges, as very well you mentioned, is the collaboration between public-private sector, and it's not a matter of technology, it's really about the geopolitical stability and national security. When we talk about national security in every jurisdiction in the United States or elsewhere, we need the collaboration between public-private sector, and I have to say, I mean, sometimes it's frustrating, yeah? We are sitting on a lot of data, intelligence, but there are some hesitations sharing this or exchanging this intelligence. Competitors don't sit in one room together. No, we own the data, we own the data. But my question is always like, are we going to fight the illicit finance, or we are looking at, other purposes?
Right.
We want to fight, we have to work together.
And it's an interesting question, right, especially from a US perspective, as we bring more things under this terrorism umbrella. Sarah, what's the implication of the US designating cartels as terrorist organizations when we think about these questions and these challenges?
Yeah, I mean, I think it's, I think it's, the intersection there is just an example of how sort of all crime now involves crypto, right? Like, we used to talk about crypto crime, and now it's just crime, right? Like, I think it's one vector through which people move funds related to criminal activity. And what's interesting with cartels, for example, which we've kind of looked at this data, is even though, I mean, there's kind of a misconception, I think, with some criminal groups. There's certain groups that are very sophisticated, obviously, and know how this stuff works, but there's still a misconception with some criminal groups that blockchain is anonymous and it's not traceable, right? But I think even when you know how it works, it's still faster, right? You can move money, it's global, and so it's still preferred to cash for a lot of organizations. And so with cartels, for example, they've moved most of their, most of the money is moving, right? In crypto, and that's also because for things like fentanyl, they're sending money to, precursor manufacturers that are in China. And so I think what's interesting is just there is actually kind of more opportunity to collaborate public-private on these types of issues because of the transparency on chain. And so as has been pointed out here, that kind of working together, public and private sector on these kinds of issues is super, super important.
Well, I think that's a great last word to end on. I want to just say thank you, Hedi, Elsa, Shlomit, Sarah. Thank you all for your attention, and we'll hand back to GBBC for our next panel. So thank you. Thanks, everyone.